I can be externally diversified in all these different industries and jets and cars and real estate and oil. All these different things are great, but I also want to internally diversify in each one of these industries.
Welcome to the Freedom Point Real Estate Podcast, where we talk about creating more time freedom through passive real estate investing. Passive investing in real estate challenges conventional investment wisdom. We are passionate about learning and sharing resources with others who are ready to transform their investing mindset. Quick disclaimer as always, I am not a CPA, I am not an attorney or a financial advisor. This is not financial advice, not telling you or anyone else what to do. The views and opinions expressed in these podcasts are provided for education and informational purposes only and are not necessarily the views of my employer, ADP. I'm glad you're here. Now let's dig in. All right, welcome back, Freedom Point Podcast listeners. Thank you again for joining another episode of the Freedom Point. I am your host, Jeremy Dyer, and today I have an excellent guest, Austin Zelan. Austin, welcome to the show.
Thank you so much for having me, Jeremy. I'm excited to be here.
Yeah, thanks again for jumping into an episode here with me. Quick little bio on Austin. He is an American businessman, an investor, a TEDx speaker, and a philanthropist. Throughout his career, he's always focused on productivity and efficiency, finding ways to have a more positive impact with his work. One thing that I learned about Austin before we hit the record button here is Austin is also a syndicator of jets, like airplanes. And so I'm definitely going to want to unpack a little bit more about that, and we'll certainly get to that. But before I do, Austin, can you kind of tell us a little bit more about your own personal investing journey, how you got started, and how you got to where you are today?
Yeah, absolutely. So, I don't really have like a day that my investment journey began. It was just always something that really fascinated me. And I remember even before having my first job, I would literally look up like stock prices and like all these things and try to make sense of it. They just fascinated me. I was like, wow, this is so cool. So I would try to make sense of it without the proper education and all that stuff, and just kind of looked at many different types of investing, and it all seemed kind of boring. But I ended up continuing through college and working kind of in the corporate world. So I did some marketing for a startup for a while. Then I went to Microsoft as a consultant. And that whole time, I was still trying to figure out investing. And so the one that excited me the most was trading. And so I ended up going into Forex trading and trying to learn how to trade. And my first year was absolutely awful. Like I just lost money for about a year and a half. But I did stick to it. And so all my extra money that I was getting from my paychecks, I was just reinvesting into my account and just trying again and trying again and trying again. And eventually I reached a point where I realized that this is not a get rich quick thing. This is something that you have to build with stability and psychological discipline. And so at that point, that's when it really started clicking, and I became consistent, and then I became like consistently profitable over a large amount of time. And so I realized that now that I had a system, I should find a way to automate it, because it kind of became like a second job. Unfortunately, or fortunately, maybe, I'm on the Pacific coast. And so for us, the trading day starts around midnight. And so you have to literally trade all night. So I'd be trading all night, trying to get a little like sleep in there somewhere. And then in the morning, 8 a.m., I'm at Microsoft. So it'd be very, very exhausting. And eventually I found a team of coders who could take my strategy and basically put it into code. So they took everything that I was doing and automated it for me. And I was like, wow, this is the holy grail of investing. I thought this was the greatest thing ever. And so eventually that was started to make me enough money where I was licensing the software to people. I was trading my own funds with it. And it really surpassed the income that I was making there. So I left that job and just focused on investing full time. Now, on that journey, I also had a very important realization, because I came to the understanding that if Forex were to ever get banned or it stopped, or maybe the market moved differently and my software stopped working, I would be in a very bad position and I might have to go back to Microsoft. And that terrified me. I was like, oh man, like this is really scary. So I started looking at other investment opportunities and different things that I could invest in. And one of the first things that I invested in was Bitcoin mining. That went really well for a while. Then there was like a coup at the company and they like stole all our miners. So overall, not that great, but it was good for a while. And then oil wells. I invested into oil wells as well, like fractional owner of oil wells. And that just continued growing into like e-commerce stores. I tried all of those, and real estate, and now jets and exotic cars and all that. All those different experiences like shaped my portfolio the way it is right now. And it was kind of a good learning experience. And I was very, very lucky to have the income coming in from the software, because without that income, I wouldn't be able to just like blindly test things, which luckily I was able to do that. And I found the ones that were working for me. And that's what I've kept today in my portfolio.
Interesting. So you've got quite a track record in what we would refer to as alternative, investments.
Yep.
You didn't really talk a lot about real estate here. Love hearing the fact that you developed some type of trading software called 4X. You systematized the way to transact stocks, which is fascinating to me
Yeah.
because the way that my experience was in day trading was back in college when I was trading stocks, making a lot of money and losing a lot of money at the same time. The worst scenario or situation that I had was when I was actually using some of my college tuition to trade on margin. And so
Uh-oh.
when stocks were, accelerating downward in the .com, bubble bursting days,
Yep.
not only was I losing, but I was losing big, right?
Yeah.
So cool that you've got that background in options trading. So what kind of then made you decide to move away from or pivot from 4X? Was there a sale of that business? Was it no longer a cash flowing entity for you? What got you kind of moving into a completely different direction, the direction that you're in now?
Yeah, I think it was really just maturing as an investor, because I still have that business, by the way, the software business. We still license it to people and we still use it. And just to clarify, it doesn't trade stocks, it trades foreign currencies. So foreign exchange, AKA Forex. But I did realize that there was a lot more safety in investing into things like real estate. So that was my journey where I went Forex, crypto, oil wells, all these things. And I realized that there's a reason that so many millionaires have been created from real estate specifically. And so then I started diving into real estate. And I have this principle that I use in my portfolio called internal diversification. So I can be externally diversified in all these different industries, and jets and cars and real estate and oil. All these different things are great, but I also want to internally diversify in each one of these industries. So when I went into real estate, I didn't just do one thing. I wanted to do Airbnb, where I was buying it, renting it out on Airbnb. I wanted to do Airbnb arbitrage. I wanted to try not buying it and also renting it out. I wanted to try multifamily. I wanted to try long-term rentals. I wanted to try fix and flips. I even invested into a development company. Like, I have no activity there at all, but I'm invested into a company that's producing income and all that stuff. So I really diversified internally into the real estate world as well, and that's become one of my strongest pillars of investing right now. So really, it was just the realization that this is Forex is fast money. Like, you can make a lot of money fast, but if for some reason it stops, I want to make sure I have something to fall back on. So honestly, real estate didn't excite me at first. I was like, oh, that's a boring investment. I don't want to make 6% a year. But I realized that there's a lot more to it that I wasn't understanding, and you can find some really creative opportunities to make a lot from real estate. So with that, I realized that I wanted to own physical assets, aka real estate, and I could use those to, even in some cases, you can use it to create an unlimited source of income. You buy something, it appreciates, you refinance, you buy something else, and you just keep buying and buying and buying. And over time, you're building a huge portfolio from that one initial investment. So, of course, the market factors have to play in your favor for that to happen, but it is a possibility. And that's where I really got excited about real estate. And so I started shifting a lot of the money that I had in like very risky investments into something that was safer, where I owned an asset and it was still cash flowing for me so that I could use that to cover my living expenses.
Sure. Thank you for sharing more of your journey there. So within the real estate space specifically, are there any particular asset classes that you tend to focus in on? Any particular geographical areas that you tend to like to invest into? What's been kind of your cadence up till now?
Yeah, so I have investments in three different states right now. So Florida, South Carolina, and also Pennsylvania. The Pennsylvania one is kind of random, but there's a cool opportunity there through one of our vendors in the program that he sources deals there off market. He gets us owner financing on them. He does all the improvement and management of them. And they're actually some of my top producing real estate projects, but they're really like low level. Like the houses are like 50, 60K. So it's not expensive at all. But I mean, they're doing well. Like my personal top performer there is doing like 5% a month, which is insane for real estate. And of course, not typical, but like I'm doing really well in that house and I'm happy for it, you know. But I would say my main focus, if I were to continue investing heavily into real estate, especially more on like the multifamily side or development or something, definitely Florida, Texas, Tennessee. Those are my top states.
Sure. Now you, I believe you founded and run a investing education platform by the
Yep.
name of Six Figure Mentorship,
Yeah.
something that you started back in 2020, and it exists primarily to motivate to help students create passive income. So can you talk a little bit more about, that education platform that you created and kind of what was your inspiration behind doing it?
Yeah, for sure. So that's one of the programs we have under Cashflowpreneur. That's kind of the main company, and Six Figure Mentorship is the mentorship program. And so, like I mentioned, that Pennsylvania guy, he's one of our vendors in that program. So we don't necessarily make investment recommendations, but we connect people with the same people that we're using for our investments. So the inspiration for the program was as I was on that journey beyond the software. It's like, okay, I had the software as a big win, great, now what do I do? So I started trying out all these different investments. And the people who were making money with my trading software are like, dude, why are you in Texas taking pictures of an oil well? What are you doing there? You know? And so I had kind of built this community a little bit and they were asking me about these different investments. And so as I started building my own portfolio, I realized that a lot of people wanted to learn about these things. And if I was going to teach people, I'm not just going to send them a couple Instagram DMs and try to explain what I'm doing here. I'm going to make it into a legit program. And they're going to have some sort of skin in the game if I'm going to spend time teaching them. So basically, we created a full mentorship program and actually launched it early 2020 as a one-on-one coaching program, and I was teaching these people the entire process. And by the way, I added a portion of it that I haven't mentioned yet, but getting access to capital. So sometimes people have capital, sometimes they have a business, sometimes they don't have capital, and so I wanted to kind of equalize that playing field where everybody could access these investments. And the way that you do it is through business credit. So I have a full process that I lead people through on business credit, setting up your LLC, picking the right name, like figuring out what industry you want to be in. All of that is very important. And then using that to get business credit from the bank that they can use for their business, they can use for, whatever expenses they have, or potentially for investing. And so I show people how to get access to capital, and then I'm showing them all the different things that I'm invested in. And so again, I'm not a financial advisor. I'm not like telling people what to invest in, but I'm just sharing my portfolio. Hey, this investment is producing for me. This is the vendor that I used. Go talk to him if you want more information, that type of thing. So it's really kind of like a review platform at the end of the day. I'm sharing my reviews and my experience with all these different vendors. And I think it's extremely valuable for people for one simple reason. Um, Out of all of the investments that I've ever tried, I would say only about 60 to 70% of them were actually successful. And
Mhm.
so, luckily, like I mentioned earlier, I had cash coming in from the software. I could try these and I could afford to lose on investments. Now, of course, my winners were usually bigger than my losers, but still, that's a lot of losses. Like, if I had 10 investments and technically four in a row could have been losses, and I could have been discouraged and I could have thought investing doesn't work, right? But if I just stuck to it and over time I figured out which ones work, why would anybody go out and go through that process? It was a horrible process. I hated it. Like, it sucks losing money on an investment. And why would anybody want to take that risk of potentially picking a losing investment or having a 40% chance of a losing investment instead of just choosing from stuff that's already worked for somebody else? So it's kind of like a research firm or a review platform, whatever you want to call it, where we go and try things out. I'm the guinea pig here. I try things. If they work, I share it with the community. If they don't, then they don't even have to learn about it. So that's the purpose of that and the motivation behind it, to help people with their two biggest issues with investing. Number one is access to capital, and number two is the fear of moving forward with an investment. So I'm trying to ease that process and remove fear from the equation, because somebody else has done it, somebody else has tried it, and now you have the opportunity to pick from their winners.
Yeah, absolutely. And I'm sure that you would agree with this statement, and that is there's a lot of people out there that do have access to capital to deploy into cash flowing investments. The challenge is that analysis paralysis tends to get in the way. And so they
Yeah.
end up just choosing to do nothing. So it's comforting to know that somebody like Austin, has been out there, kind of paving the path, learning from your own mistakes, and that's key right there. I mean, I can tell you firsthand, I was always trying to find, the next stock that was going to rocket to the moon, right?
Mhm.
And I would find that stock like 1 out of 10 times, and I would lose 9 out of 10 times, right? So
Yeah.
lessons learned, right? I learned from my mistakes. I've been able to pivot from those mistakes, and so it's great to see what you're doing with Six Figure Mentorship. It's almost like you're creating this investment ecosystem that comes with a degree of mentorship support, at the same time for those investors. So kudos to you on that.
Yeah.
One
Thank
other
you.
thing, you're welcome. Yeah, one other thing that I also learned about you, Austin, is that you've been able to successfully generate over $20 million in passive income. That's impressive for your investors, I assume, not just for you individually, but for your
Yeah. Yeah.
investors. $20 million in passive income. What are the key factors that contribute to that consistent, success of your passive income generating investments?
Yeah, I'd say there's a couple factors that we like to focus on. Number one, it's who is the operator of your investment, because I have this like saying or this formula that I use, that the numbers can qualify an investment for me. So if I'm just blindly looking at an investment, if I look at the numbers, they make sense. That qualifies the investment. But the only thing that can disqualify the investment is the operator. So if it's a horrible operator, if it's the best investment in the world, but I don't trust the operator, I'm not going to do it. I would rather have a great operator and a mediocre investment, because I know that they're going to operate it well and it's actually going to work. So the key is choosing your operators, choosing the people that you're operating these investments with, and partnering with them, because at the end of the day, they're the ones that are making you the money. So you have to make sure that that is something that you research, maybe a relationship. At this point in my career, I'm mostly just focused on relationship based operators and partners. So people that I know, people that are in the same circles as me, like different masterminds, or like mentorship communities like John Maxwell, Tony Robbins, that type of stuff. So I'm looking for people who are in those communities. They know the people there, and I'm looking to partner with them on certain projects. So that's number one. Number two, though, is being like willing to take that step, because it is scary for a lot of people. They don't know maybe the first thing about investing, but taking that first step and knowing that it's a process, that is what I see consistently with the most successful investors in our program. They're the ones that were willing to not overanalyze, not overthink things, but just go in and trust the system that it works. And those are the ones that are seeing success. So, additionally, I would add also is diversification. So, I've seen, I'd say, yeah, probably consistently also the most successful investors are the ones that are diversified. And that's because sometimes the market changes. Sometimes there are uncontrollable factors in the market. And if you're all in on one thing, sure, if the market is good, you might be making a lot of money. But if the market turns, or maybe there's a pause, all of a sudden you lose that income stream. And so it's important to have those things consistently coming in every single month, because that's how we build that financial security, or like a financial moat around ourselves, where we have all these layers of passive income, and if a couple of them are removed, we're still fine. We're protected, our lifestyle is protected, our status as an investor does not change.
Austin, you just gave a great masterclass to the passive investor out there that has maybe never taken that next step. I would add one more step to that. And it's obviously something that we've already discussed, and that is just getting educated, right? The
Yeah.
reality is most investors today are only as educated as what their financial advisor tells them or what their friend Brad next door, found as far as that shiny new object goes. You
Yeah.
also mentioned, the distressed, distressed, which obviously right now in real estate specifically, there is some distress happening within certain asset classes, within certain, market locations, and within certain operators. And I hear this, phrase distressed asset being thrown out there, time and time again. But the reality is it may not be that the asset itself is distressed, it's the operator that's distressed, right?
Yep.
And so what we're seeing now in the real estate, industry, as interest rates, increase, valuations decline, sponsors aren't able to meet their, debt service requirements. We're starting to see some of those valuations drop. It's not that that asset in and of itself is a distressed asset. It's that the operator themselves are distressed. So we're likely not obviously seeing, the building, the actual apartment building or complex is still going to remain there. There's still going to be occupants that live there, but what's really going to be changing, what we've already seen, changing within the last couple of years, has really been the operators or the sponsors. So it's great to know that your number one is the sponsor or the jockey who's riding the horse. Number two is investors just need to get educated and eventually take action. And then your third kind of leg to your investing stool there is really to be diversified, right? Because some investments are going to be home runs and some of them are going to be base hits. And there may
Yeah.
be some investments, in fact, that you maybe lose a little bit of money at the same time, right?
Absolutely. Yeah, definitely. I totally agree with those. And I think that you brought up a really good point that it's not always the asset that's distressed, sometimes it's the operator. And so it's our job to be prepared to take over those assets and to take on those investments for ourselves if we see that the operator can no longer handle them. And I see a lot of that happening probably within the next 6 to 12 months, specifically in multifamily real estate. So we're positioning ourselves right now for some really juicy deals coming up, which I'm sure you're seeing as well. But even with the jets, we're seeing the same thing happening with private jets, where people who have 3, 4 jets, they're like, well, hey, maybe I don't need 3, 4 jets. Maybe I just need one, and so they're starting to let them go at like really, really great prices. And we're able to scoop them up and get owner financing and all this stuff. So it's interesting. I love learning so much about the recession market and how it's affecting people's spending habits and their perceived necessities in life, and the different modifications that they're making to their lifestyles right now. And of course, I think that recessions are needed in order to create inefficiencies in the market. Now, my professors would argue that the market is efficient. However, I disagree. And I always told them that I disagree because I think that it's not always efficient. I think for the most part, it's efficient and it reaches an equilibrium. But there are these moments of inefficiency that we can take advantage of. And they happen to everybody. These opportunities come to everybody. Now, it's our job to be prepared to meet those opportunities and to take advantage of them and not let them pass by before the market reaches equilibrium again.
Yeah, absolutely. You brought up the Jets, and when we had first talked about this off air, originally I was thinking that you were referring to the football team, the Jets, but you're referring specifically to airplanes. So it's not been a topic that we've discussed at all, here at the Freedom Point. Would love to
Yeah.
have you tell my listening audience a little bit more about your investing strategy and syndicating jets.
Yeah, absolutely. So it's very similar to multifamily real estate, except it flies. So the idea is we bring in LPs and they provide capital for a down payment on the jet. So, for example, let's say we're buying a G5. It's about a $10 million plane. We have one under contract right now for like 7.7, I believe, which is an amazing deal. And we can add maybe like 500,000 to $1 million in renovations, and it'll be worth 10, 11 million easily. But let's say we're just buying a $10 million one right off the market. So if we're buying a $10 million jet, we'll need about 20% down. So we need to raise $2 million. Now, those $2 million will go as a down payment on the jet, and this jet will likely cash flow about $1 million net per year. So after all expenses, after maintenance, after our engine program. So engine program is basically every hour that the jet flies, we set aside some money to overhaul the engines, which has to happen. It's a routine thing in every jet. So we set aside money so that we don't have a capital call in the future. And of course, like insurance and pilots and pilot training and parking and all that stuff, fuel, all of that is accounted for. And so we're seeing these G5s do anywhere between like 500,000 to 1.5 million net a year after all those expenses. So if you're paying cash for a $10 million jet, yeah, you didn't really make that much money. You made maybe 5, 10, 15%. But if we're thinking about the model where we're providing a down payment for it, we're putting 20% down, $2 million, we're buying a $10 million jet and we're cash flowing $1 million, that's a lot, you know? And the other cool part I like about it is that we're also paying off the jet. So part of that expense that gets calculated is our monthly debt service. So we're paying off the jet month after month after month. And at the end, that person is going to benefit from that as well because they would own, let's say they buy 10% of that $2 million down payment. They invest 10%. So they would own 10% of the jet. So their stake of whatever it might be, 200,000 or so, it's going to grow to about $1 million no matter what, even if they didn't cash flow. And once the jet is sold, they would either receive that capital or they reinvest into the next one. So the ideal model there is the upgrade model, and it gets really interesting as you get to like jet 3 and 4. But let's say we just go to jet 2, so we use that 10 million now as a down payment on a bigger one, and so that would be a 20% down payment on a $50 million jet, so maybe like a G650 or something. And if we're buying a $50 million jet, they would still own that same percentage of it. So if they own 10%, their 200,000 bought them 10% of the G5, they would also own 10% of the G650, which is a much more expensive jet. And once that's paid off, again, $50 million jet, now their share is worth like 5 million. So it
Sure.
just gets really, really interesting. And as you keep scaling and scaling, it's cool.
Now, I assume these are illiquid investments. What is a typical, deal hold period for the limited partner investor?
So we allow them to exit the investment whenever they want if they find somebody to replace them. But typically, we require them to stay in for at least a year. And then if they express their desire to exit the investment, then we find somebody else to replace them or we replace them ourselves. However, the loan is typically for 7 to 10 years. So to pay off the jet in full would be 7 to 10 years.
Is that traditionally fixed rate financing, or are these
Yeah.
floating rate loans with a rate cap?
Yeah, fixed rate. I've seen anywhere from like 6 to 12% interest. Nothing too crazy, but yeah.
Does the investor have the option to execute a 1031 exchange in the jet syndication investing world?
I'm not sure on that. We have never done that before. But I'm sure there's some way to do that.
Okay.
I've heard of people doing that. I don't remember if it was jets, but I've heard of people doing that in some sort of asset class other than real estate. So I assume it's possible.
Sure. Are there tax depreciation benefits to the limited partner investors that are part of these syndication funds?
Yep. Yeah, exactly. So we can depreciate the jet fully in year one, or we could stretch it out up to 15 years. So
Okay.
typically we opt for the first year.
And that's accelerated depreciation because it's a piece of equipment being put in service. It doesn't fall under kind of the same rules as like a multifamily property would. Is that right?
Yeah. So it's called Part 135, which is jet charters. So in the charter business, everything, including maintenance and fuel and all the expenses, those are all write offs. So they
Okay.
get the tax benefits on all that. They get the depreciation on that, plus write offs for maintenance, any repairs, anything like that, because it's business equipment.
And when you raise capital for these types of investment opportunities, are they typically 506B or 506C offerings?
So we currently, the way that we're doing it right now is just a basic SPV. So it's not like a fund. We're doing specifically for each jet. We have an LLC that's formed.
Okay, interesting. Austin, this is fascinating. It's an asset class that I've didn't even know existed until today.
Yeah. Yeah, it's kind of cool. I didn't expect it to be something so popular and so interesting for people, but um, I know a lot of people invest in real estate, and there's a lot of competition there, and people are all kind of going for the same deals. Whereas in jets, nobody really thinks of it as an investment like that. And so, yeah, it's a cool field, and I'm really enjoying being a part of it. And we've also made it kind of like a community as well. So the people who are investing into the jets, they're also getting invited to like a mastermind event, and they're getting to network and collaborate on other stuff as well.
Good. Well, thank you for sharing that. What would be maybe next on Austin's bucket list that you'd like to check off, whether it be personally or professionally?
Um, well, let's see. I'm moving a lot more into like private equity deals right now. So I've acquired equity in like 9 or 10 companies in the last 12 months, whether financially or through consulting, or I've started them. And so it's been a very interesting journey, and I just want to continue growing that side of the business. I think that is the easiest way to reach my financial goals. And I like being a passive investor in businesses as well. I think it's an amazing asset class, if you could call it that. But I'm really enjoying it, and focusing on companies that I see high cash flow in. Because I can get those quarterly distributions and still look for appreciation in the long run.
Well, I've really appreciated the value that you've been able to bring our audience today, Austin. What would be one or two or multiple ways in which our audience can connect with you to learn more about six-figure mentorship or about Cashflowpreneur?
Yeah, so the easiest way is going to be on my Instagram. It's at Austin Zelan, AustinZelan. And then also the easiest website is going to be investwithaustin.com.
Great. Well, we'll definitely put those in the show notes. And again, I appreciate you joining us today on another
Yeah,
episode of Freedom Point.
awesome. Thank you for having me.
Yeah, and listening audience, thank you again for joining us on another episode of the Freedom Point. We look forward to having you join us on the next episode.
Thank you for hanging out with us today and for listening to the Freedom Point podcast, powered by Starting Point Capital. This show is for entertainment purposes only. Nothing said on this show should be considered financial advice. Before making any financial decision, please consult with a professional. This show is copyrighted by the Freedom Point podcast. Written permissions must be granted before syndication or rebroadcasting. If you're interested in connecting, you can find contact information at startingpointcapital.com.